Hey guys, welcome in this new video. I hope that all of you are doing great. So very excited for today's video because what we will do is that we will go on the market and I will share with you guys what I think of the stock market, the dollar and stuff like that, right? So I will just update you guys on my view of a few different big markets, and I think that this video will be very valuable. I will try to bring you guys as much information as I possibly can, and the goal really is just to try to help you as best as possible, right? It's been quite a long time that I haven't recorded a video like this on YouTube, so I was really excited to record this one today, right? And as I said, right, I'm just really going to try to give you guys as much free information as I can. So yeah, if you are excited for this video, just leave a like under it. I would really appreciate it. Make sure that you are subscribed as always to the channel if it's not already done. And with that being said, well, let's just get into the markets and let's just look at these charts. Alright guys, so we are now on the markets, and what we're going to take a look at are really the real charts that I use on a day-to-day basis to look at my trades and stuff. So this is really unfiltered information. I didn't change my charts, I didn't do anything, right? So I'm really going to be as real as possible with you guys and just show you what is up essentially on the markets, right? So first of all, let's start with the stock market. So I will always give you guys my view in terms of fundamentals and my view in terms of technicals, which are just as equally important. Now, in terms of fundamental analysis, we still have one big problem, especially in the US, but also in other places in the world, which is inflation, right? So this is the main topic that everyone is looking at right now. And so because of very high inflation, the Federal Reserve has started to raise rates a couple of months ago, and they are still on the path of hiking rates. All right. Now, that is really still the main topic, as I said. If we look at other places in the world, for example, in Europe, we also have a big problem with energy prices that are related to Russia and Ukraine situation, right? So Russia limiting supply mainly of natural gas, right? We also have a few different overall problems, such as what could potentially happen in China if COVID comes back and if everything goes back in lockdown. So there are a few main really big events to look at, and overall, right, to really just try to keep it as simple as I can for you guys so that everyone understands. Overall, my fundamental view, right now is mainly negative but / neutral, okay? So we can have different fundamental view overall on the markets depending on what happens in the world, and this will give me a better idea of what I can expect on the markets. So right now, my view is mainly negative / neutral. What does that really mean? Well, that means that the market will still be in a correction, which is what the market is doing right now. So we are still overall to the downside, right? We are making a downtrend. So it is negative, but it's not that negative in the sense that we are not getting a crash at the moment, at least, right? It looks more just like a market correction more than anything else, right? And so that's the neutral part, in the sense that yes, we go down, but overall we are not going down that much and we are still playing around the same level, right? So that is the view that I hold right now on the markets. Now, the other part of this is simply, where is this going in the future, right? What and how can this view develop? Well, I would say that it mostly depends on inflation. If inflation keeps going back down, because in July we had the first reading of inflation that was slightly lower. Well, it was a 0%, so essentially it didn't keep rising, right, which was the case previously. So if inflation goes back down and it goes back to, you know, what the Fed is targeting, which is 2 to 3%, then at that moment, right, expectations for rate hikes will be much lower as well, and this will be something that is very positive for the stock market. So that is the first scenario. The second scenario is that if inflation either stays very elevated or keeps going up, the Fed will be forced to hike rates even more, and this will push the stock market to the downside. So these are really the two main scenarios. What I will be looking for personally are the next few data points for inflation, which will be the CPI release. The next one is at the beginning of September, so in about 2-3 weeks, if I remember correctly. So this is what I will pay attention to. In the meantime, as I'm recording this video, we are in the middle, well, more toward the end of August, but still we are during the summertime, and August really tends to be a slow month for me, and overall it tends to be a month where nothing much happened. Now this year has been quite different because I actually took a few trades during the month of August, which most of the time I don't really do, but these are very long-term trades, so it doesn't really change anything at this point, right? Now overall, that's the thesis that I have right now for the stock market. If we look at the technicals, right, we can see that the stock market actually rallied nicely in the last couple of weeks, right? So throughout summer, and we actually came back to a really big area, which is right here. We have these previous little highs there, and we mostly have the trend line right here, so the third touch, and the 200 daily moving average, which is a really big level around 4,300, and we can see that the market clearly reacted around this level, and we actually rejected this area here to make a pullback all the way to this next level that I have right here on the chart, which essentially is this cloned trend line. We have a few lows around here, and we also have the 38.2 fib, which is in this zone, right? So this is a overall interesting level to look at right now, and I think that the market, now that it made a push to this level here, I think that the market has a good probability to stabilize until that we get either the Jackson Hole, which is a fundamental event that we have this week, where Powell, which is the let's say president of the central bank, will speak. So this could give a hint for what is coming with interest rates in the next couple of weeks. So this is a pretty important event. But other than this, the next big event is really just the release of the CPI data, which will give us a better idea on inflation, right? Because what is really important for you guys to understand is that the central bank has three main goals: to maintain a stable currency, to maintain a good job market, right? So a lot of jobs, and if people want to work, they can find a job and stuff, and maintaining, well, low inflation. So right now the job market is very good, the currency is stable, so the real big and only problem is really inflation. So that's what they care about, and that's what we care about as well as traders, right? Now, as I said, there are really two main scenarios of how the stock market could develop, right? If we try to keep it as simple as that, the first scenario is that the market could stabilize around here. And if we get, let's say, a very low inflation, and it really starts to come back down, then maybe that, as I said, rate hikes will be less than expected. And if the market makes a correction around these levels, and then we break to the downside, so we break above the downtrend, we break above the 200 daily moving average, well, this would be actually a pretty positive sign, a very positive development, and maybe that the market could go back all the way to these levels at least, which would be around 4,600, right? So this would be the scenario where we have lower inflation, and rate hikes expectation would be lower as well. So this would be a very positive development, and this would even potentially be a trade that I would be interested in if it happens in the next couple of weeks. So of course we will need to wait and see how it develops, right? And if we get something like this, but if we do, I would definitely not be against going with a position like that. The other scenario is that once again the market could stabilize around here, or if it wants to go a bit lower, we would have this level right there, okay, with this fib level, this previous high, and this moving average. Or if it wants to go even lower, we would have these highs and lows with the trend line, right? So we have a few other levels under that. And then, well, we will need to watch again what happens with inflation. But if inflation stays very high, or even it keeps going back up, right, then there is a really big problem right here. And I think that the Fed will push very high interest rates, and this will probably make the market go down. And I would not even be surprised in this case that we actually go all the way to these lows, and maybe even more, in that we just make a much deeper correction on the markets. So these, over the medium to long term, are really the two main scenarios that I'm working with at the moment. So either that we get a correction and a break to the upside on low inflation, and that we get a really nice move, and this would be a great trade, or that the market completely reverses on very high still inflation, which means higher rate hikes. So I hope that this is clear. Again, I'm trying to keep this as simple as possible. And of course, as I said, there is the talk with what's going on with China. So if China goes into lockdown, this could create some fear and some negative overall development on the market. So we'll need to wait and see, but really I'm more focused on inflation and rate hikes at the moment, and that's really what we we care about. So essentially, that's the thesis for the stock market. Pretty simple, as you guys can see. Now, to show you guys a few other markets that are just as important, we can look at the dollar, so the DXY. So this is the dollar index. As you guys can see, in terms of the dollar, we are still in a beautiful uptrend. I am riding this trend through Euro USD. So I'm short on Euro USD and the trade is running very, very well. It's in a pretty good profit. So we are still in an uptrend, right? And it makes sense. The dollar right now is really one of the only safe bet that people see. And that's the reason why there is such a high demand for the dollar. They are still hiking rates, right? Even if they at some point will mostly slow rate hikes, because at some point inflation will most likely come back down, right? Well, what will happen with this is simply that it's still quite of a long time from now. So the demand for the USD is still very much alive. And it still makes sense to own the dollar at the time being. And what is really important as well is that, as you guys can see, the uptrend is still perfectly valid, right? We're still going up. We're still above this trend line. We have this 50 moving average that is being respected. And we have the 50 RSI that has been respected for a very, very long time. We only have this little moment here where we dipped a bit under it, right? But overall, the trend is perfectly valid. And I would say as long as we stay above this level here, the whole uptrend is still very much intact for the dollar, and I am still expecting the dollar to keep going up over time as they are still hiking rates, and as they are hiking rates more than most of the other places. And it really makes sense that the USD is still considered as, let's say, a safe haven, right? As a place to actually be where there is risk overall on the markets. Of course, if inflation stays very high and they hike even more, this will push the USD through the roof, okay? And it's going to create a massive move if inflation starts to come back down, you know, in a couple of months, right? For a few months in a row, I mean, right? And they actually start to slow down rates, right? And stuff, then the dollar will probably start a bigger correction. So we need to keep all of this in mind, but at the same time, you also have to keep in mind that the DXY, the way that it's measured is around 50% euros. So if euro is very negative, this indirectly helps the USD, and at the time being it's the case. The euro is very, very negative, and that is the main trade that I have on the markets. I have a few different positions on different euro pairs where I'm short all over the place. This is the main trade that I currently hold on the markets, right? So I'm short on EURUCAD, Euro AUD, Euro USD. I have multiple shorts and I've been in these trades for quite a long time. The euro situation is extremely negative with very, very high energy prices. There are just so many problems in Europe, and the central bank will not really be able to actually hike rates that much, simply because at the end of the day, right, if they do hike rates, well, it's going to put an even worse situation. The recession will get even worse. Energy prices are not that related at this point to interest rates, in the sense that yes, they are, but at the same time, if Russia is limiting natural gas supplies, well, I mean, hiking rates is not going to create natural gas, right? So at some point they have to deal with this situation, which is extremely difficult. So if we look, for example, at Euro USD, as I said, I am short Euro USD. It's going very well. As you guys can see, the downtrend is perfectly valid. We broke under the parity level, which is the one level right here. So I think that the probability that it keeps going lower is quite high from this point. And I'm already so in the trade, as I said, right? The downtrend over the long term is still perfectly valid. And the problem is that if we actually go lower than parity, well, there isn't many obstacles until this level right here, or even these lows right there, right? So there is quite of a big potential room here for the downside, right? So there is a real risk at this point for the euro, and as I said, that's really the main short trade that I hold all across the board, and I've been in this trade for quite a long time, okay? And we can then express this very negative view on Euro USD through USD positive, if that makes sense, right? So essentially, that's the idea for the DXY. So as long as inflation stays quite high, as long as they hike rates, and as long as the euro is very negative, then I'm expecting the dollar to maintain overall a strong bias. So that's the idea. After that, if we look at oil, which is very, very important, oil is the main commodity that everyone looks at, and it's really one of the commodity that has the biggest impact on inflation. So if oil goes back up, inflation is most likely going to go back up. interest rates are most likely going to keep going up and the stock market could keep going down. So the correlation between oil and the stock market is inversely correlated. That's really important to understand. So oil right now reached a pretty big overall level. I have a lot of obstacles around here. If it wants to go lower, it could, but we are trying to break here to the upside. Now, to me, this move is a bit meaningless. Okay, it's too small to actually consider, right? So you know what I'm looking at right here, which is really important, is that I don't really care about these little ups and downs around here on oil. What I would really start to care about is that if we get a really big push to the upside on oil, then we make a correction and then we break to the upside. This would be a really important event, because as I said, it would mean that inflation would go back up, interest rates would go through the roof, and the stock market would go very low. Okay, so that is quite of an important market to look at. It's going really to be helpful to see where inflation could go depending on what oil does. So this is one thing that I'm looking at the time being, right? The market is just making a big correction, right? It's just going sideways for now. So what I'm really looking for is the next big piece of the puzzle. Is it going to break very low, right? Is it going to break under all of these obstacles and just make a much bigger correction, or is it actually just going to stay around here or even break to the upside? And again, this comes back to the two main scenarios that I talk about on the stock market. Same thing for the dollar, right? There are essentially two main scenarios all over the place. It really depends on inflation and rate hikes. Essentially, that's the idea. If we look at a few other markets, right, let's look at Bitcoin. A lot of people are still interested in cryptos. So Bitcoin has been in a very strong downtrend, right, for quite some time. We tried to break above here. As you guys can see, we were slowly getting back into a uptrend and we got above a few obstacles, but right now it's not really looking strong. We have these two lines that I'm really paying attention to, right? If Bitcoin really starts to break under this trend line and under these lows right here, I think it's going to get under pressure. We might retest this overall area right here, but if we break this, we might even get lower. So there is definitely a risk here of a bigger correction, I think, on cryptos. But if we actually hold this level right here, then we could probably go back to this level there. And then the question from here is, well, are we going to get a correction then break, or are we just going to come back down and then break lower, right? So these are the few different possibilities. I don't have a really precise view on cryptos. I don't really trade them, right, or anything like that. At the end of the day, Bitcoin has followed quite closely the Nasdaq and the overall technology stocks. So I think that if inflation goes back very high and they hike more, I think that Bitcoin will just keep going down with the stock market. Essentially, that's the idea, right? If we try to keep it simple. If not, the opposite is also a possibility. If we look at gold, gold made a nice pullback from this massive level right here. We hit this trend line, right? And these few different obstacles right here. Since then, we've made a pullback. Now, the big question on gold is, are we going back down to this low and then either break to the downside or go back up, or are we going to just make this as a pullback and then try to break to the upside? These are the few different possibilities that I'm looking at. Again, it mostly depends on inflation in interest rates, because gold is inversely correlated to yields, and yields right now are around a pretty big level. For those of you guys who don't know, yields are essentially just a proxy to see what the market is expecting with interest rates and how the market is actually looking at this, right? So right now, the market is still expecting quite a lot of rate hikes, okay? And so that's really important to keep in mind. But we are around a few big levels. And as I said, what will really move the market is either what Powell will say at the end of the week or the next big inflation number release, right? Which will come more toward the beginning / middle part of September. So in a couple of weeks, right? So that's really important to understand. Maybe the market will stabilize until then, but we are around a few big levels. But if we break through these levels, we might retest this one or even more. If not, we might go back down and just make a bigger pullback. There are a few different possibilities, but we need to wait for more data. So essentially, right at this point, I personally already have quite a few trades on the market. So I have a few commodities and I am very much short on euro, as you guys understood, right? So I already I have quite a few positions, right, within my portfolio. At this time of recording the video, I'm not really looking to add any new positions, I think, for either this week or in the next couple of weeks. I think that I'm quite well positioned on the market at the time being, so I will wait and see what actually happens with Powell and with inflation, essentially, right? And from there, I think I will be in a better position to make decisions. And that's also the message that I wanted to bring you guys across, right? Remember that we are doing August, we are doing summer. It doesn't mean that it's the best time to trade. It doesn't mean that it's the worst time to trade either, right? I mean, I took some trades, as I said, right, and I am positioned on a few markets, but it's really, really important to be careful and to wait for more data, because at the time being, the two main scenarios that I highlighted are really the big two main ideas that I think a lot of people are rocking with. And at this time being, it's hard to tell which one will actually happen. It mostly depends on how inflation evolves. And I think that once we have a better idea with this, we will actually start to see if the Fed will keep hiking for multiple months, or if they will start to slow down and maybe even at some point cut interest rates, right, in the future. And so once we have a better idea of the path that they will take in the next couple of months related to how inflation will develop, this could also lead to new trade opportunities. So that's the idea, that's the breakdown. I hope that this gives you guys a good perspective. I hope that this, as I said, brings you a lot of value. I tried really to be as raw and as unfiltered as possible, just sharing with you guys what I'm looking at, what I think is important, and yeah, essentially that's the idea. So I hope you guys enjoyed the video. If you did, again, don't forget to leave a like on it. You can also share it around, and on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye bye.